Learning to manage your options position is an absolute requirement for any successful trader. And here's an example. And I'm going to walk through this example because I run into too many people who are putting risk on who don't realize that you can do this. ABC stock, 12 strike calls are trading for 40 cents. Stock's trading at 10. All together, let's buy 10 of the 12 strike calls for 40 cents. It's a $400 investment. The great thing about this investment is we can never lose more than $400. If the stock goes to zero, we lose $400. If the stock goes bankrupt, worst case scenario, you can only lose $400. When I teach, how I want you to think of this position is instead of thinking that you own the 12 strike calls for 40 cents, if you bought 10 of them, I want you to think like you're long 1,000 shares from 12. Why do you want to be long 1,000 shares from 12 when the stock's at 10? Yeah, you get massive leverage to do that. You're able to get long 1,000 shares for only $400. That's pretty cool. If the stock goes from 10 to 11 to 12 to 13 to 14, listen to the question. If the stock's at $14, if there's 10 days to go until expiration, if you want to take off every bit of your risk, what can you do? Stock's at 14, you want to take off 100% of your risk. What can you do? Steve, what does that mean? So what can you do, guys? You own 10 of the 12 strike calls. There's 10 days to go until expiration. The stock's at 14. You want to get out. You want to lock in profit. What can you do? You can exit your position. Andy, no problem. You're long 10 of the calls. You can sell 10 calls. You are out of your position. You have zero risk. What else can you do? Okay, you guys all put threes on there, threes, fours, and even my 5. You have risk on. You worked your ass off for your capital. You just put your capital at risk in the market. You need to know everything that's available to you to manage your position. And if you don't, respectfully, you shouldn't be risking money in the options market until you learn more. Take it slow, paper trade, prove to yourself that you can learn this. Okay? The 3 things that you could do, guys, is you can get out of your position. What about selling 1,000 shares? Sell 1,000 shares at 14. Did you realize that you can do that? You're long 10 of the 12 strike calls. You're long 1,000 shares. You can sell 1,000 shares. Why would we sell 1,000 shares rather than just selling the calls? Well, we could sell the calls, fine, no problem. We make money, right? But what happens within 10 days to go until expiration? What happens if ABC stock comes out with accounting fraud? And all of a sudden the stock goes from 14 and drops to 5. What happens then? Well, if you would have just covered your calls, you would be out. You wouldn't have any risk. You invested 400, you probably made 2,000, great trade, good for you. If you take my advice and you sell 1,000 shares and this happens, you have zero risk on, but you can buy those 1,000 shares back, you make 9 grand, and then these will go out worthless. We want to be able to manage our options by using the underlying stock. It's really powerful. Andy's saying, what if the stock price goes up? Does anybody want to answer that question? It's always weird being on this presentation because I think the best way to learn is to ask questions. It really helps me to see where people are at. When I ask questions, if I'm in a room, I can see people shaking their head like no problem. But if you ask questions on a webinar, I don't really get that feedback. Okay? So when I ask questions, totally cool. Just understand that. That's why I'm doing it so much. So what ends up happening, guys, is if you sell 1,000 shares at 14 and the stock goes to 100, it doesn't matter. At expiration, you're long 1,000 from 12 and you're short 1,000 at 14. You're flat. You have zero risk. So Andy, you don't have to buy the stock back. You're covering the stock at expiration because your calls are stock. Options are a derivative of stock. When you trade options, you're trading stock. You see how that works? Options are stock, stock are options. They're just a derivative of one another.